Hello traders, John Hyaden here with another daily revision. Let us begin. Before we stop, as always, I suggest you stop the video and read the general risk warning. It is very important for your knowledge to understand the risks under trading. Upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. The entire focus today will be on the dollar pairs as more members of the Federal Reserve speak and give their opinion on the upcoming interest rate decision. Furthermore, the building permits and the housing starts will cause high volatility along the day, and if that's not enough, the FOMC meeting minutes is taking place at 7 p.m. GMT. This meeting is being examined by the traders for any clues in the speech for possible interest rate changes. US market Wall Street trading session yesterday was pretty steady at the end of the day after the big indices lost most of their gains due to the talks around another terrorist attack in Germany. That's after a positive day for European markets and the preparation for today's FOMC meeting. Using the technical analysis approach, we can see that the S&P 500 is not showing the expected strength from Monday, and we received a pattern called head and shoulders, which represents a possible change in direction from upward to downward trend. In conclusion, the upcoming FOMC, which probably will end for increase in interest rate next month, and the fact that Europe is under attack of terror in the past few days will not help the graph in reaching its higher highs. As you can see in the graph below, I've marked down the pattern, the head and shoulders. You can see the left shoulder here, the head and the right shoulder. This is 1 hour daily chart. If we will break this area over here, we should see a big drop, a drop that can be great for us to trade put options. Commodities, gold, horrible overnight session for the commodity. The price fell to almost 5 years low, as both Fed interest rate decision is getting closer and investors brush off the geopolitical concern over the terrorist attack on Paris last week, which automatically leaves the safe haven around the gold meaningless. Using the technical analysis approach, we can see the graph broke the last major support area. According to the analysts, we should not see any recovery for the near future. Therefore, the commodity should keep falling. As you can see here in the graph, I marked down in yellow the last support, and we broke it down with big heavy candle, and we should see another fall downs. Crude oil, as I said in my early revisions, the gains from Monday were only temporary. The attacks on Syria did not last long, and the idea behind traders who thought it will affect the price of oil for the long run was deceiving. The price of the crude oil went down pretty fast, leaving the main downtrend still in position. Today, the crude oil inventories may change the direction for the short term, but in general, we are still heading downward for the next support level at $38.50 per dollar per barrel. You can see pretty obvious in the graph below. This is the crude oil daily chart after we broke this support area here, which we bounced on almost 6 times with big rally downward. We got this green candle on Monday, but as I said, it will not last for long, and we got another drop downward, which is just a start for the put options we can make out of these opportunities. Stocks, Amazon is showing tremendous strength in the past year after gaining almost $450 per share. The upward trend does not seem to end, but more importantly, the stock is not acting like the entire market. Of course, for the short term, we might see similar movements, but for the long run, this stock is working like a machine. In conclusion, according to analysts, we should see more buyers in the near future for the stock, but you can also take in consideration for the short term trades whenever the market is showing positive days. Like the one we had on Monday, 85% of the stock rise as well. Therefore, Amazon, as you can guess, is the first one to make profits. You can see it in the graph below. Look at this beautiful rally. This is a weekly chart of Amazon. Look at the strength upward, breaking resistance, and not even going back to check if it changed its role from resistance to support. It just moved higher and higher, and we should see this rally upward continuing. That's it for today. If you guys have any question, please contact me on binaryoptionsreview@gmail.com, and of course visit Ken Davis' blog on binaryoptionsreviews.net. And I'll see you again tomorrow.